So two very important things happened in the market last week. The first one is we saw continuation above the macro uptrend on the S&P 500. And what do I mean by that? Well, we have this one trend line here, very simple and straightforward to follow this. We have one trend line that goes all the way back to the October 27th low of last year, and we've remained above it so far until, as of recently, we broke back below in early August. Well, look at what happened here. Bulls were actually able to reclaim this trend line on not only the daily, but also the last 2 weekly candles. So that's very bullish that they're able to do this. And that is, just technically speaking, that is a bullish uptrend that has been reclaimed. Typically, that's a precursor to even more upside if we're just basing this off technicals. So that's the first thing that I wanted to share with you. The second thing, if you look at this picture here, you can see that there are now about 3 to 4 rate cuts expected by the end of the year, and that's only going into November, since December is not on this plot here on Bloomberg Terminal. So you can see that there are 3 to 4 kind of in the middle right now based on what the Fed said at Jackson Hole. Regardless, that is definitely a shift from what was previously to be the case when people were thinking, oh, maybe there'd be 1 or 2 by end of year. Now it's 3, possibly even 4 by November, which would mean we'd have to have about a 50 point cut here upcoming, whether it be September or later. So that's definitely something of interest from last week. Of course, we had Jackson Hole where the Fed spoke about their policy. So just wanted to bring that to your attention. And then one last thing I also want to talk about today, and I'll get right into it over here, is NVIDIA and S&P 500 flow. We had a lot of bullish flow across the board last week, but it mainly was coming from these two tickers, both NVIDIA and the S&P 500. And some of these orders that we saw, as you can see on Twitter there, they posted a lot of these unusual orders. But if you scroll all the way back, and there's a ton of flow, like this is ridiculous. I have it filtered, by the way, for over $500,000 worth of premium. I'm going to have to do it for over $1 million now just to get to the useful stuff. But you can see I just have to scroll through a bunch. This was a lot of call monetization over here for the December strike. So nothing too crazy. It really isn't much in terms of put flow. As you can see up here, 19% put flow to 80% call flow. So really a lot of the calls, or the red on here, are just calls being closed out for the most part. But you can see some of these earlier prints from the week. We had 1.3 million over here for the 150 strike. Over here, 1.3 million again for the 150 strike. These are both for January, a little bit further dated, but still a lot of premium behind it. 2 million for the 122 strike for 9/6. So that is September 6th. Really doesn't have that much time overall until it expires. Over here, we had a put sell order for 1.3 million. So a lot of bullish emphasis early on in the week. And as you can see from over here, we did have a very bullish outcome as well to the week. So a lot of upside, mainly on Monday and then Friday, because we did have this downside candle over here. But for the most part, the bulls have remained bid in terms of call flow that we've seen throughout the week. So a nice upside day over here for about 4.5%, and then over here also for about 4.5% on both of those days. There was certainly some consolidation between Tuesday, Wednesday, and Thursday, but for the most part, this is holding its uptrend. We haven't really seen any substantial pullback. Like, this is the extent of the pullback, only negative 3.7% on a daily close, and then it just popped straight back up again. So very clear that ever since it broke out of this wedge over here, that it's been able to remain bid, and it continues to look like that as long as we continue to see these mini, not even a pullback, get bought back up. So that's the first thing I wanted to mention, and flow remains strong. So that's always a good sign to see as a complement to what we're looking at in terms of the technicals. And then also another thing I want to mention is SPY flow. We saw this order last week. This hit the tape, $7.1 million worth of premium for an out the money call early on in the week. That person is actually up about 42% by the close of last week. So they continue to hold their position just based on the existing open interest. That's what we're gauging from it. And as long as they remain open, this person is targeting for some more upside. It looks like they want to be in the money, at least by the time that they do monetize their position. So they have a little bit more time. They have about 2-3 weeks or so until that expires. So good to see that they are continuing to hold that. At least that's a bullish emphasis. They expect some more upside. And no surprise because of what we saw from over here based on this uptrend reclaiming on the daily. And then also we had it retested over here. So if you don't believe in the trend line that I'm showing you, I could also just show you this right here. We had a retest on Thursday twice, double bottom formed right on this trend line. So this is already a trend line I had before, spoke about in previous videos. You can see it's been respected a couple times recently as well. But then the most recent second one was this retest over here, and it was supportive. So as long as this S&P 500 stays above roughly about 556, we can expect continuation to the upside, regardless if you think we're overbought at the moment or overextended, whatever that may be. This, just technically speaking, is very bullish. Whenever you reclaim a breakdown level like we had right here, or any type of breakdown level for that matter, that is bullish, you typically see continuation. And I can map that out anywhere. I could show you just for a mini educational lesson. You could see over here we had, for example, this was a previous range right here. So we have a range. The top of the range obviously is where we rejected 3 times, and then the bottom of the range is where we found support a couple times from back here. Well, we broke below, and we had our confirmation. First confirmation was this candle here, April 12th, and then the second confirmation was obviously this continuation candle for more downside, and it continued to fall afterwards, and eventually there was a time where we retested it intraday over here on May 3rd. Retested it, rejected intraday, but then it gapped up above, and this is critical here. It gapped up above this crucial resistance, because previously it was a support. As we know, once that breaks down, it turns into a resistance. There was a resistance over here, broke back above, and then huge continuation of the upside because it was able to reclaim the previous range that it had a breakdown from prior. So once this was reclaimed, had a lot more upside afterwards. And the same would apply for the bearish instance as well. If you ever have a range that breaks out and then price comes back within, typically you're going to see something like, let's say if we broke out over here for a bit and then it fell back below, you're probably going to see continuation a lot lower. We consider this to be a failed breakout since it was unable to hold. So that's just your mini educational lesson for you today. One other thing I do want to mention is, and this isn't something we talk about that much in these videos, it's actually the dollar. And it may sound boring to you, but just bear with me, no pun intended here, because of what we saw last week. You can see we had a pretty large scale breakdown, and this has remained bidless for the last 1 to 2 weeks or so. And that's interesting to me because there has been some form of an inverse correlation between the dollar weakness and then equity strength. So we've seen a lot of equity strength, at least within the past 2 to 3 weeks now. And we've also seen a lot of dollar weakness within the last 2 to 3 weeks now. So this is a major breakdown of what was previously a substantial range on the daily. It hadn't really strayed much from about like 101-ish to 106. I've really been stuck within there for the past about 1.5 years or so. And it finally broke down below what was this previous uptrend over here. So it's very interesting to me that we saw this, and the extent of the breakdown too is pretty impulsive in nature, which leads me to believe there will be continuation to this theme as well. So if that does have continuation, we see that benefit in equities as we have so far, and you could actually map that. For example, up here, I can compare, let's just say the S&P 500, for example. Well, we can see that inverse correlation as of recently. And at first, they were relatively aligned when you see this downside move over here on the daily, downside move over here on the S&P 500, but then found a bid, very aggressive bid. And once that occurred, the dollar was unable to go along with it, continued to have downside afterwards. So not necessarily the best in terms of correlation, but what this does tell me is even though the dollar has broke down on the daily, like I just showed you, broke down from this uptrend, the S&P 500 is still able to remain resilient, which is a good sign because it looks like there's going to be some more continuation here to this theme of overall dollar weakness. So just wanted to bring that to your attention for this week. And then the final thing I do want to mention today is IWM. And the reason I want to mention this is because it broke over a very critical previous supply zone. And this one's very interesting to me because technically speaking, this over here, and I'm referencing this being above what was the previous supply zone, the blue here, this over here is a failed breakout setup, kind of what I referenced earlier on in this video in that MIDI educational lesson. And we saw it have continuation on the downside, but instead of continuing even further, it was able to find a bid and then break back above the supply zone. This is actually pretty rare to see something like this. So the fact that it was able to reclaim this range that we have over here, now it's a demand zone because we're above, is very bullish in my opinion. It was able to fill this breakdown gap from before, from over here on August 1st. So we finally were able to fill that gap. Also a very bullish sign. Plus, as of last week, you could just check over here in the historical flow tab, there was a lot of bullish flow as well. 1 million for this 225 end of September expiration. And a lot of these came in later on in the week versus previously bearish flow early on in the week. And those bears ended up getting kicked in the nose once it did break out back above here. And I remember flow is not 100% all the time. It's always best to use it as a form of confluence or some type of confirmation bias with your previously identified setups or a certain criteria that you follow, and also could be used as a scanning tool to look for something. Let's say if we saw a lot of bullish flow in NVIDIA, you go check it out, check the chart out, you like the chart, follow some of your criteria that you want, then you can make a trade thesis based on that as well. That's kind of how I like to use it. Others may disagree, but in my opinion here, good to see the late week strength. No surprise that a lot of the bullish flow from last week came on Friday because of this large upside move, literally 3.19% to the upside. Very rare to see such a bullish day on the Russell. So as you can see here, a lot more upside probably to come as long as it remains above, I'd say about 212. This is where the upper end of this previous supply zone, now demand zone is. So 212, we see it hold above that. You're going to see a lot more upside above this. And there's a minor supply zone here. And the reason I know that, again, a mini educational lesson for you guys, is because of this rejection. So you can see the wicks on the daily. Top of the wick over here be the top of the supply range, and then the lower wicks over here be the bottom of the supply range. So really 224 to 228-ish is the next supply range to break above. This is, of course, much smaller in stature compared to this supply zone over here. So really the brunt of the work has been done since it's above here. The next target would be around this range here. And above that, we could really see it fly for a bit. So I'll be continuing to watch IWM, possible trade setup up here once it does retest the supply zone again. And I'll be continuing to watch for that confluence via the flow as well. Regardless, as always, appreciate you guys watching this video, and I will catch you next time.